Welcome, everybody. My name is Alexandre Kech, CEO of GLEIF. And in today's Trust Talk, we will be talking about a very interesting topic, T+1 and data-related activities. Europe is preparing to move security settlement from T+2 to T+1, with ESMA recommending October 11th, 2027 as a transition date. It's next year. So that single day reduces risks, but also compresses every step in post-trade: matching, confirmation, settlement, collateral management, liquidity management. So in this episode, I'm joined by Eva Keller of Clearstream to explore how post-trade data and digital operating models are evolving to support T+1 readiness. We will discuss Clearstream push towards proactive analytics, what clients really need from data channels today, and why globally standardized identities matters for straight-through processing across borders. We will also discuss a little bit what we've worked on together at the recent hackathon, where Clearstream was named a runner-up for using the vLEI, the Verifiable Legal Entity Identifier, as a secure login standards for its platform, demonstrating how digital identity can streamline access, strengthen access permission, and enhance operational efficiency. So let's jump into the questions and the introduction. So Eva, do you want to introduce yourself and what you do at Clearstream and what's your background as well?
Very happy to do so. Thanks for having me here, Alexandre. My name is Eva-Maria Keller. I'm actually with Deutsche Börse Group for more than 20 years. Have been involved in many topics around data and transformation. Right now, I'm an executive director and heading the data channels and digital operations at Clearstream, where we're really trying to move into a data-driven operations setup. And there are topics like the LEI and vLEI are obviously important ingredients to move forward.
Yeah, absolutely. So your role sits, we could say, at the intersection of data, client channels, and digital operations. So what are you seeing changing the most quickly currently in post-trade?
Yeah, actually, the key trend that we're observing is really about digitization. Digitization in terms of operating models. And in those operating models, what is really the new tweak is that we see the traditional and the tokenized assets that are increasingly coexisting. And obviously, this coexistence creates some challenges that post-trade needs to prepare for to really have that as seamless as possible. I mean, seamless from a data perspective to create full transparency across the different rails, but also seamless from an accessibility point of view. So that is really a key trend around digitization and the parallelism of traditional and digital. And the other thing that we see is a trend towards retail-driven expectations. So even though we are ourselves in a wholesale market, we increasingly see users expect the same speed, the same transparency that they know from consumer processes. And I think it's partially driven through the rise of neo-brokers that are becoming an increasingly relevant group also in our wholesale environment. And they, as a client group, they set high expectations in terms of these retail type expectations. And I think that creates a nice push into the post-trade space.
Absolutely. So everything being done, having to be done within seconds, right? When post-trade used to be T+1, T+2, T+3, quite a challenge. I was myself working at Bank of New York in global custody, so I know very well what we're talking about here. So when clients consume post-trade data through APIs and portals, what's the hardest to get right? Is it around entitlement and access control, standardization, something else?
Well, it's sad, but entitlement and access control is still a challenge. I have to say it's really getting the balance right between having a secure and very precise permissioning, but at the same time coming back to user experience. Yeah, I mean they are expecting, for good reasons, to really have a very intuitive access to ourselves through the different channels, and this balance between the risk and also the experience is really something that we're still working on, to really get that right and make sure that we don't need to bother people with certifications and all of that when accessing our UIs. So that's really something where there's still a lot of challenge, I would say. And next to that, it's also moving at all to those modern channels. Yeah, I mean, we still see that a lot of our clients are pretty much stuck in their legacy setup. So they are very deeply, the legacy channels are deeply embedded into their core processing. So moving to API and digital channels is really something that is not so easy and comes with a price and a risk for them. So also there we are betting a bit on the new market players to push into a direction that is more flexible and applying really the benefits that APIs and portals bring.
Absolutely. And I remember working at SwiftN in banks as actually as far as a few years ago, we still had clients sending faxes over for instructions. Is that still happening?
Unfortunately, it is not so much on the security side to some extent, but of course we also have the fund business, and their faxes unfortunately are still in heavy use. But yeah, there are those cases still existing, so something that we definitely need to work on.
And that's clearly highlighting the need for transformation, and especially when we're moving to T+1. So that's the next chapter of our conversation. So the date of 11th October 2027 has been set for a shift to T+1. So from our perspective, when you need that speed that we just discussed, that usability that we just discussed, what are the most significant operational dependencies that firms underestimate?
For me, there are two key things. One is really about the quality of the instructions. Yeah, that is really something where discipline is really something that seems to need some improvements. Yeah, I mean, so far it was not so much of a problem when there were small discrepancies in formatting, when there was some enrichment still required. But I mean, now with the tightening cycles, I mean that really easily becomes an issue. And there, I think the instruction discipline is really something that needs to be worked on to ensure that instructions are sent very early, yeah, ideally complete in the first place, and accurate, yeah, so that we don't run into fails. That would really be, I think, one of the key things that are critical, next to something that is even closer to my heart, which is data. Yeah, I mean, data quality is something that obviously is a prerequisite for getting it right, for being able to manage the same level of settlement efficiency in a shorter time frame. Data needs to be clean. Reference data needs to be standardized. Yeah, everything needs to be accessible in real time, not in batches or the day after. Yeah, that's really where data is, I think, a crucial topic here, and not only the data that describes what has happened, but also everything that goes in the direction of predictive and really making sure that we can anticipate and the clients can anticipate what is going to happen, where they may need liquidity, where they need to have their collateral allocated. So I think that is certainly something where, there's still some work to be done to be ready for October next year.
Well, you mentioned actually two aspects of being ready for T+1, like funding predictability. You also talked about settlement efficiency. What does being ready really mean in terms of T+1 readiness?
Yeah, I mean, being ready ideally means that there's really an enormously high STP rate. And I mean, if we think of STP as the ultimate goal, then we could even think about T+0, obviously. Yeah, and for me, that is really the ambition that is on the table. And that means that, yeah, as STP is really the ambition and the target. But as we all know, full STP is something that will not be possible probably before October next year. So next to making sure that STP rates are maximized, I think similarly important is really to establish processes that allow for fast exception handling, to turn around any hiccups as quick as possible, to detect them as quick as possible, or even anticipate, as we just said. That is something that I think is really important when preparing for this change. Next to the data, and I mean, we're trying to support our clients on that with all the data products that we're offering. We're running this Next data suite, where we are offering especially analytics and predictives in the settlement space, but also around collateral and liquidity, because I think those are the areas where clients need to work on, and where they are very thankful, I have to say, to get those extra transparency pieces, those dashboards that we offer to clearly highlight to them where the critical parts are, which are the counterparties that tend to be late or inaccurate, which are the currencies that they need to focus on. I think that is really the type of tools that the clients should make use of for proactive decision making, for proactive preparation of smooth transactions, I would say.
Excellent. So those analytics tools that you've built are really, did you build them at the request of the customer, or or more like a proactive offering that you thought would be needed, and that the customers actually appreciate you proactively building for them?
Actually, I would say it was a mixture. I
Okay.
mean, we have obviously a continuous communication and exchange with the clients to find out where really the appetite and the interest is. But then we also have a great team of data scientists that are coming up with really cool ideas and very innovative approaches to really allow, especially the predictive stuff. I mean, that's a very powerful and new capability that we have developed, and where the immediate feedback from the clients was that this is absolutely helpful. And we are then fine-tuning with the clients together what exactly is it, where they want to dig deeper, and and then even trying to apply fancy stuff using AI, where we are offering this is very early days, but where we are offering talk to your data application on those products, where clients can then even more flexible drill down into what has happened to be able to get full transparency and then prepare for smooth transactioning.
So to close the T+1 chapter, at least for now, North America has moved to T+1 in 2024, so last year. I'm guessing that you're learning from that experience in talking to your peers or your clients as well, because they're also active in that market. How useful has it been to have them moved first, and how has it been influencing your analytics tools, but also your way of dealing with that migration?
Yeah, I mean, we looked at that very closely. And of course, it's always good not to be the first mover in such a risky undertaking. So it was good to watch what they are doing. We do also run a T+1 preparation project and initiatives, where we are really assessing what can be done and what can we learn from them. I think the topics that we already touched on, like getting timings right, looking at instruction quality and all of that, that was something that seemed to be also a majority of the challenges that they were facing. But the key difference that we concluded so far is that the environment in the US is slightly easier to manage. I mean, with their central and only single infrastructure that they have with the DTCC, I mean, getting that right and that transition smoothly is probably a little bit easier than getting the same done in Europe, where we have still the multiple markets and infrastructures. and the cutoffs that we need to align across those different places. So I think it even requires a stronger coordination and really a close collaboration between the different parties to make that work. But I don't want to sound negative or pessimistic. I think there's a good preparation underway, and I'm sure that we will also make it very well. But there's still some prep work to be done, I think. And this is where we try, and we also take our responsibility as an infrastructure seriously. That we really help the markets to get through that and get ready with data and stuff that we can offer.
Yeah, and Europe is used to those big migration, T2S, ISO 20022, and all those major projects at a global or European level. So that's also a good practice beyond that US T+1 experience. In capital markets and banking actually as well, data, as we mentioned a few times today, is critical, and good data and quality data is very important. What about identifiers, who are a piece of data that is quite foundational to everything? How do you see, for example, the LEI being used today across the post-trade lifecycle?
LEI is definitely a very important identifier, and I mean, for us, obviously, like for everyone in the industry, it's a standard part of the onboarding. It's a very crucial component on maintaining our client records. Yeah, it's really a front and center a reference data set that it became, and for me, it's really something that creates trust, which, as you know, in our regulated environment is also something that has quite some value. So, I mean, it's important to really ensure that there's absolutely no ambiguity across the counterparties and markets, that everyone really knows who is who, and that simplifies, obviously, matching of instructions, reporting purposes, reconciliation of transactions. So I think the LEI has really proven to be a very important addition to our framework in the capital market. And for me, it's really surprising that it took so long for it to occur. I mean, I recently researched that, and because for me it's very similar, like the ISIN for the instrument, yeah. And then I was typing in my Copilot when the ISIN was introduced, and I had a good laugh because I found out that the ISIN is exactly my age, so turning 45 this year, and then I also researched and found out that only in 2012 the LEI was really coming to life, and I wonder how it could take so much longer for the industry to understand that such an identifier is really helping a lot. So it's really I think for me absolutely LEI as important as the ISIN, and I think a big game changer to streamline and orchestrate the different processes in the capital markets.
Yeah, indeed, it is surprising. Well, so that LEI is only a young teenager compared to ISIN, ISIN could be the LEI father or mother in terms of age. It's quite impressive indeed that it took us a crisis, actually the 2008 crisis, for people to realize that identification of legal entities, meaning the entities that are the ones signing contracts, that are responsible and accountable in anything that happened in finance and banking, would not be properly identified. So yeah, obviously that's our job, and we welcome also, of course, the support of Deutsche Börse and Clearstream and other entities who are believers and helping us with the adoption. Just want to mention to our audience that Deutsche Börse is also part of the International Securities Service Association, so ISA, who recently issued a paper in November on onboarding and digital identity, where they reaffirm the need for LEI to be systematically used for client identification and onboarding, actually pushing all custodians and CLDs around the world to use the LEI as a foundational identification system. So hopefully that will further help with the adoption beyond Europe, because in Europe we do have a good adoption, but in other jurisdictions, it's not still the case. Moving to vLEI now. So the identifying organizations is important, but an identifier, an analog identifier on its own is not sufficient when on digital platforms, for example, to prove that you are effectively talking to the right entity. So the vLEI, as maybe other audience would know, is the cryptographic verifiable form of the LEI. Where do you see immediate value for post-trade providers in terms of leveraging the vLEI? Is it at onboarding? Is it message authentication? Is it all document signing, instruction signing, or all of the above?
Well, I think it's definitely a very cool concept that there's a lot of potential in definitely in the digital onboarding part. I mean, for me, that's the most obvious to start with. I can well imagine that it could really streamline a lot the identity checks. Especially if we're moving to a fully digital environment. I can imagine that this will really be a good component to reduce the back and forth of identity checks during onboarding, but also KYC later on. I think that is really something where we as an organization, but the industry as such is still, I think, not where it could be. So I think an identifier could certainly help a lot to streamline those processes. And next to that, I mean, we touched on the digital developments earlier on. Using such a tool for the signing of an instruction is certainly also an interesting concept, and I think it will be key to understand how this works in a wallet ecosystem, and how this could potentially then also streamline the two worlds again. Yeah, the traditional and also the fully digital. So for me, that's really interesting options that we have on the table that are definitely worth to explore to really drive further forward the automation of those processes that are linked to identities. Yeah, so I think really different things to look at. But yeah, I think quite some potential to drive forward on that side.
And that's we obviously agree, and this is something we very focused on, the applicability of LEI and vLEI into the digital asset space, where the world or the architecture is more exploded, more decentralized by definition, and where trust is also more and more pushed to the borders, pushed to the decentralized. And how do you enable trust in that ecosystem? And we see two things: verifiability of wallets, of course, who those wallets belongs to and are they compliant, and verifiability also of smart contract and tokens. So is that token effectively issued by that issuer, or is it a fake token, which happens unfortunately in open architectures? So I'm looking forward to definitely continuing the dialogue with you and other market infrastructures on that topic as well. So in closing, so if you could fast track one industry change to improve post-trade efficiency and resilience before 2027, what would it be?
Definitely fully digital environment, a true digital ecosystem where all the processes are paperless. We touched on faxes earlier on, where and they still exist in some corners. Yeah, and that is really where we're creating inefficiencies. I would really love to see data flows natively going in and out. Everything leaving a clear digital trail. I think that would remove a huge amount of friction, and at the same time also improve the resilience of the system. So I think that would be the one thing, if I had a wish, that we would really move into a fully digital environment.
Absolutely. So digital trail, as you mentioned, is good for resilience, but it's also good for auditability, obviously, of everything that happens, and ensuring compliance as well. Actually, it's quite strong. So we always finish our session by asking the same question. So what's the one thing you would want listeners to remember about our discussions today and the role of post-trade data and verifiable organizational identity in getting to a safer, faster settlement world? It's a big question.
One thing would be high quality data. High quality data, be it on financial transactions, instruments, or the actors in the market. I think this high quality data is really something that, as we just said, creates the trust. And for me, the trust is really important if we want to move to the next level of financial markets, be it in terms of speed or in terms of digitization. I mean, trust will become even more important, and high quality data, I think, is a very important ingredient to create that trust.
We will finish on this high quality data requirements. And I want to thank you very much for this conversation. So it was really enlightening for me, and I hope it was, and I'm sure it was for the audience as well. Thank you so much, and see you soon.
Thank you very much, Alexandre.